What's going on, guys? Get started in a minute. How's everybody doing? Just getting my studio makeup on. In backstage prep, you know. Just let me know if you could hear me, though. Just want to make sure the mic is good. Let's make sure there's no weird lag. Oh, good. Okay. So, loud and clear? Cool. All right. 1 second. I know when I use Streamlabs chat, it's a little bit delayed. So I'm just going to open up the other chat. 1 sec. Okay. Cool. Let me just overlap these. Bear with me. Sounds good. Cool. Actually, there's not much of a delay. All right, so everyone just caught up. That's good. Cool. All right, let's get into it. Stream Deck button. Let's see how effective this is. Good stuff. What's going on, guys? How's everybody doing? I guess I should look at the camera once in a while, but I'm going to keep an eye on the chat. How's everybody doing? You should be able to see the chat pop up on the screen now. Looking fresh. Thanks, man. What you don't know is I'm in pajamas right now. So, from the top down, just boxer briefs. Makeup looks good? Good. I have, you know, my almost 3-year-old. She is the applicator. So we'll get started in a minute. Pores looking fresh and clean. We'll get going in a minute. So like I said, I'm going to be streaming more consistently every single week now on Friday. So I think we'll stick with the 2 p.m. slot. Last week, unfortunately, my uncle passed away, so we had a full week of events around that, and here we are on Tuesday. So moving forward, these streams will be a little bit of everything. We'll take chart requests. I'm going to start by announcing that the giveaway from the last stream has been done. Madeline's doing well. The giveaway from the last stream is done, so go ahead and check the comment section on the last video. So the instructions were to leave a comment, leave a like, and obviously be a subscriber. So I just announced the winners. There's 4 winners. This is through TradingView, and then right after the stream we'll announce the Jiu-Jitsu video winners. Like I said, like it's been pretty crazy the last couple of weeks. Obviously, no, I don't mean the BJJ draw. That is going to come. I'm going to announce that on Twitter. The last stream that I did, we did we thought we were doing a TradingView giveaway that day, but then I actually read the fine print for the giveaway, and it turns out it wasn't live yet. So I'm going to give away 4 TradingView subs. You guys are going to see that now that I have this HD camera, I constantly get like the fucking liquid on the top of my beard. But yeah, check the comments. I just announced 4 winners. It'll say winner and then exclamation point. And if you are one of the winners, just comment under that. I'm going to be checking the handles to make sure there's no one that is, you know, trying to take advantage of the system or me just looking over things too briefly. So we'll do some giveaways moving forward. We'll bring those back, bring back the spirit of giving, and then we'll take chart requests during the streams. Like I said, we'll cover a little bit of everything. So we'll cover anything that is current and relevant. I think there's a lot of things that are current but are not necessarily relevant, especially to, you know, predominantly the crowd on crypto Twitter and the group that I have, so the community I have, the trading stable. Most of our interests lie in like 1 hour to 1 week time frames. So I think there's often a lot of things going on that are not necessarily pertinent to most of our trading, but end up being more or less some form of entertainment. And unfortunately, I think a lot of the times this just leads to distraction. It leads to style drift. So we will talk about the macro, you know, the macro in quotes, but I don't want to focus too much on that because a lot of the times the most important thing is just price. I mean, more often than not, the most important indicator is price. Stories often come after the fact. So the why that happens is often manufactured after a move has already taken place. You know, there's a lot of times that it's kind of, you know, it sounds good, right, to have a narrative after the fact, but I think most of the things regarding macro are things that have an impact on, let's say, like the mid to secular trend. And the reality is most of my trading, most of the trading of the people that follow me tends to lean more on the, or tends to have or place more emphasis on time preference, so it has a higher time preference. So I'm in a position and there's really not many things that can affect it between now and the time that I close a position out, unless like the world was going to get hit with some kind of, you know, tail event or black swan, which is always possible, but that's one of the reasons why trading short term has its benefits, and that comes down to being exposed to less variance. So I think there's a couple things that are obviously worth talking about before I switch over to the chart. A lot of what has taken place over the last week, I think, like a lot of the TradFi wobbliness has to do with the confidence in rate cuts. So in a very short amount of time, we went from near certain rate cuts in December to, I think it was 30%, and then 75% before today's PPI, or 80%, and then today after PPI, it is, I think it's coming in around 85%. We'll check all this in a second. We'll open up the charts and look at the CME rate tool. But that's important, right? Because I think that is, you know, whether or not we have rate cuts, that has an impact on the kind of, I think, tailwinds that markets might have, right? I think right now markets can use a lot of tailwinds because TradFi seems somewhat wobbly, especially when like the overall driver of the market right now is sort of hinged on this, and talking about TradFi, not necessarily crypto, but what happens in TradFi, I think, has spillover into crypto, and crypto ends up having more downside capture than upside capture. Obviously, that's the characteristic lately, that crypto it's underperforming. So I think there's a lot of like Stockholm syndrome participants here who just don't trade TradFi. They haven't, you know, broadened out their horizons, and they're still stuck in this idea that crypto is the best trade when it clearly isn't. I think it's an easier market. It's a less efficient market, but there's a lot of other easy trades that are available that fall more, you know, it's less idiosyncratic and more just momentum driven. So the primary driver of markets over the last few months and year plus, obviously, has been this whole AI story, right? The AI CapEx story. So NVIDIA has been, clearly it is the leader in this regard, or it is the bellwether to some sense. And only recently it started to seem a little bit like it was on shaky ground. You had good earnings and you had a negative response. So the response of price is often more telling than news itself, obviously, right? So if you have a beat in earnings and prices now, 4% down the next day, 4% down the next day, right? This is, I think, giving you some indication that underneath the surface, things don't look so good. And more recently, you have Google starting to, I think, overshadow a lot of the competitors in the AI landscape, right? And this is good because I think the momentum that Google has right now is like passing the baton in some sense. and distracting everyone from the fact that NVIDIA is still, more or less trading like shit over the last week plus. So my opinion is, though, so just to get all this shit out before we look at the charts, my opinion is, I mean, if you think that like we're peak bubble, right, and that this whole AI CapEx cycle is near its conclusion, you should probably be in cash, right? If not, you should probably look at NVIDIA, which is, I think, it might be, someone tell me in the chat, it might be like 17 or 20% off the highs now. Someone has to double check that. I just could have completely made that up. If you don't think it's over, you have to look at NVIDIA as, an incredible buying opportunity, right? It's like, it's an accidental sale in some sense, okay? If this story is going to persist, NVIDIA should remain a good buy moving forward. So I think it's kind of one of those things where, unless you're calling the end all of everything, that you have to look at this as a buying opportunity. And it's just one of those times where I think you have to be willing to take the risk, right? I would say, obviously you control where you insert yourself into the market, not necessarily where you come out of it, but this is one of those times where, if you're, thank you, so 16% off the highs. I think this is one of those times where you have to say, like, unless you're calling the end of everything, which I think there's a good amount of people doing, NVIDIA right here is worth a shot, okay? So we have PPI today, not spooking the market much lower. Equity indices trading kind of all over the place. If you look at just ATRs over like the last 7-day look back period, 14-day look back period, 20-day look back period, it's expanding. So markets are trading like they're trading very thin. This morning was a great example of that, right? I mean, you had the ES like just right off of the open, just a sell program, like a small bounce and then sell program for, it was just a one-sided move down and then complete reversal, and then made new highs, right? And NVIDIA too, obviously connected to tech, had a fucking disgusting day early and then completely recovered, okay? So, it gives you some kind of insight into, I think, how healthy markets are right now, right? The fact that they're not very sticky, or rather prices are not very sticky. And I think this is in some way, right, this is, this should kind of, I think, it should inform, I think, the level of risk taking, right? These are, I hate, getting overly cautious, but these kind of price movements, they are, I think more often than not, they're what you see before you get a larger correction. And this also happens to be a holiday week, so, that's another detail too that I left out. So anyway, we're gonna get into taking chart requests. I'm going to give just my opinion on BTC. I'll go over some of the things that I shared in the stable community recently as far as bottom signals checklists go. What I have to say right away is that, like, one of the first questions you should be able to answer from a 30,000 foot view is, what is the trend right now? And the trend is objectively, right? Objectively ascertainable as it can get. It is down, right? So I think there is a lot of recovery that's necessary before you get overly optimistic. I think most of the market right now is, so for one, there's a ton of PTSD, and you could see the PTSD in just the way that the market is trading on the lower time frames. Like, positions are put on, right? There's put positions put on, and then longs are closed out very quickly. There's like this weird dilemma where the market has been moving down almost monotonically for a couple weeks now, right? Barely any effort back, like just sell programs on the open during the New York session early on. This has been really obvious, right? It's been very one-sided. So it's reasonable to expect at some point you're going to have some kind of mean reversion, right? A kind of counter trend move back in the opposite direction, even if it's just like displacement fill from the air pockets created on the way down. Even though the way down, it was pretty constructive most of the way. And you're at that sort of 30%, 35% correction territory that is notable as far as being new characteristic of post ETF BTC, right? Like no major drawdowns so far, right? So there's this weird dilemma right now where everyone expects a big bounce, but I think there's barely any confidence. And while everyone expects a big bounce, everyone is also sort of unanimously in agreement that the bounce is going to be a sell, right? So I think this is kind of the time where a floor is, it's reasonable that at this level a floor could be established based on some of the feedback that we're getting from the market, not just like, vibes sentiment, but some derivative feedback. So if you're looking at, like, we'll look at quarterly basis, we'll look at 25 delta skews, 1 week, 1 month. We could look at just funding rates, which has started to briefly go into the negative territory on and off. That could obviously be that could be because of just the shift in liquidity, though. There's a few other details we'll get into in a second. So this is kind of the area where, and again, from just like a peak to trough standpoint, this is an area where, hey, like, you should expect some kind of pushback, right? Even if it meant, and I think it would be, that the market would continue to best case range and continue to test the low again at least one more time. I think it's clear, again, the fact that this trend is flipped. I try to give this analogy when it seems fit, and prices, when you talk about the higher time frame trend, which, for lower time frame traders, you should always still be mindful of the higher time frame trend, especially when you're near pivotal points in the higher time frame trend where everyone gets involved. And the higher time frame trend turning is like a tanker ship turning. Low time frames, that's jet skis, right? High time frame, when that turns, it has a significant amount of inertia and it's difficult to get it turned back in the opposite direction, right? You might briefly get it to change course, but chances are that the market is going to continue to be testing lower, not necessarily extremely low prices, but at least I would say back towards the low 80s. Because I think there's going to be some systematic selling pressure as we try to reclaim some simple levels such as moving averages, right? 20 period SMA, 20 period EMA, 50 period SMA, 20 period weekly moving average, just areas where you might see an abundance of sell pressure come in. So this is kind of a decent area where a floor might be established, but it's probably more like a time-based repair of the charts versus a price-based repair. So the idea is that we'll probably spend some time moving sideways and building up confidence before seeing some kind of positioning-driven V reversal that, makes everyone more or less feel like they have to catch up to it. I think that's the least likely scenario. I think the most likely scenario, and honestly the best case scenario, is, let's say an 80K or high 70s and 100K range, right? We've had substantial ranges in the past that offer incredible trading opportunities, right, on both sides, but it takes a while to establish the floor, right? So, I mean, yeah, right now you're seeing the behavior and flows that say, hey, it's mostly driven by short-term speculators. People are really skittish about positioning. No one wants to be the last one out the door. CVDs are flat, for example, go into that. There's sort of this, there's this exhaustion of short-term belief, right? So longs come on really fast, or longs come off really fast, and shorts are put on very quickly, right? People are quick to hedge, quick to sell. Not even shorts necessarily, but just to dump any positioning that was picked up. So let's get into the charts. Let me look through the chat real quick. Google's my makeup artist is good. Thank you. Let's see. View on stocks. I mean, listen, stocks are back above some of the more important moving averages. I think that had we continued lower, this is going to sound kind of like, yeah, it doesn't really say a whole lot by saying this. Had we continued lower, we would have brought in a lot more selling pressure. And a lot of that comes down to the fact that you start to bring in some of the more systematic sellers. So your CTAs would have gotten more involved, but now we're back above the 50 period. We're tapping at the 20 period. And CTAs in particular, it's like one of these participants in the market that are like, their flows are super hand wavy, right? I mean, people just reference like, oh, Goldman says CTAs are set to buy this amount, sell this amount over, a 30-day period, over a 1 week period. They're a significant source of flow, but they are definitely not the largest movers of the market. But it is important to understand like where flow might, where things might, where pockets where gasoline might be poured on the fire, right? And the fact that we're back above key moving averages, in many ways, a lot of these CTA models and approaches, so commodity trading advisor, they're basically systematic trend followers. A lot of these can be reduced or very closely reduced down to some basic moving average crossovers and a vol component, right? If vol is up, like CTAs are often going to be de-risking, right? Might be putting more on based on where vol levels are and taking off based on where vol levels are. But the fact we're back above moving averages, I think, it puts us in a way better position, right? I don't want to give any firm beliefs on the stock market though, because the market is just, I think it doesn't pay for me to get out of my lane that often, right? I think it's more entertainment. It's more like, stroking your ego to get like a bigger picture call right with the stock market. But it's important, I think, just to understand what kind of environment we're in. We're in a really headline-driven environment. We're in a really, this is I've been trading for almost 20 years now. I feel like probably going on over 20 years. And this is the craziest time that I've ever traded. Now, mind you, when I started trading, when I had traded through the global financial crisis, I have traded through some really interesting periods, and this is by far the craziest fucking time. And it's because of the administration, right? So I think it's tough to make any kind of firm calls, right, about where things are going to be in a couple weeks, a couple months from now. In general, longer term views are really trivial, right? I think it's easier to say where things will be in the next 5 minutes, maybe 5 days, than it is to say in the next 1 month to 5 months. So I don't want to call top on stocks or be one of those people. Google's Nana Banana Pro is exceptionally good though. I got to check that out. Let's see. All right. BTC Fartcoin hype. So I was long Fartcoin, close that out. Loving your YouTube playlist. What do you think of the idea of the 4-year cycle? Yeah, I think the extremely bearish sentiment is a contrarian indicator when it is, let's say, when it is backed by large, I think just if you, not just like vibes, right? So if you see that positioning is one way and then the just broader media outlets are one way, then yeah, that's probably it's more often than not, you'll find that at turning points. But this extremely bearish sentiment is a contrarian indicator. What is this at this moment, right? I depending on where I look, one area is extremely bullish on stocks forever, right? We're going to 7,000, and then the other side of the room is, is calling for a return back to the prior all-time high, which we never got, and it would be completely reasonable. So I try to stay out of these conversations because, again, I just don't have an edge there. What do you think of the idea of a 4-year cycle? Interestingly enough, it is lining up perfect timing, but I think people are too hung up on things sort of being replicated exactly. History doesn't repeat, it does rhyme. This is a very different cycle, right? So ETFs have, and before the ETFs listed, right, and started trading, I had said this. I said ETFs are going to change the way that BTC trades. Well, they have completely changed the way that Bitcoin trades, in good ways and in bad ways, right? There is more of a passive bid in BTC. It is greater than it ever has been, right? It's not there like it is in blue chip stocks, right? It's not there like it's in ETFs. But it is now there more than it ever has been. It is in many ways proof of concept, right? So we're here, we've made it, and BTC has traded differently from ETFs. And then you also have the the vol product effect. So the options market, the derivative market, as these mature, volatility will continue to come down, price action will change, right? It's not like BTC won't move the way that it used to. It won't do it as frequently, right? So you still have very positioning driven moves, but you can see that a lot of what Bitcoin has been doing over the last few years, or couple of years, a year and a half, we're going on 2 years now, but you could see that it hasn't had these let's say, like lockout trends, right? Where in the past it would just, you were locked out literally. Like if you wanted an entry, you had to zoom in on the very low time frames. You had to buy higher, which is a completely reasonable strategy, right? In a market that is moving on momentum and trending, right? But in this market, as of the last, again, post ETF, the behavior of BTC is noticeably different. It will have, it might feel lockout for like 1 to 2 days, and then it just ranges for a really long period of time, right? Comparatively to the trending periods, which is a normal characteristic of markets for them to spend more time ranging than for them to spend time trending. But it's just different, right? So I think it is honestly lining up with the 4-year cycle. But I don't think that really does a whole lot for me. So again, these are like coffee table conversations. It's like, what is your opinion on this? It's not going to change how I adjust my exposure, how I put risk into the market. It's something to be aware of, like, oh wow, it's shaping up to be similar to how it's been in the past. But at this point, I've de-risked substantially. I was hedged quite effectively from the highs, not from the highs, but for anyone that was, in the community, once this swing failure happened on the weekly, it was curtains for me, right? It was get super defensive, and I've managed to be bearish most of the way down. I think, though, you have to be really open to the idea that it's probably going to trade more in line with traditional markets. I mean, one has to hope, because that hasn't been as evidenced as you would want to see. I mean, there's been plenty of periods where, plenty of periods. A majority of the last year, it seems that the trade has definitely not been in crypto, right? There's really not many reasons to be invested in this market. Like, we're repackaging old shit. It's a hype-driven market. It's underperforming things that give you actual rights, right? Shareholder rights, an actual interest in a company. So it's super difficult to compete with traditional markets that are offering that and are also offering incredible momentum trades. Anyway, let me get into the actual charts, because I'm going to just fucking talk nonstop. All right. We could see this clearly. So I want to go over some of the things that I had mentioned in Telegram and just things that we want to start looking for. I shared these in this is what I'm talking about when I say the trading stable. I shared these in the stable. We're looking at, this channel is just a bunch of educational breakdowns. It's kind of all over the place. But I shared what I think is a really comprehensive list of bottom signals for this market. I'm not going to read it, sort of verbatim off the pages, but 25 delta skew, so being extremely negative. So again, 25 delta skew in this market, when I say negative, it's because it's the call minus put skew. So that is the sort of FX calculation, so 25 delta risk reversal. So you have your 25 delta put, your 25 delta call, and it is the implied volatility levels of those minus, right? So the negative value implies that it's the call minus put. So if you have a 25 delta call that, let's say, it has a, the IV is 50 and the 25 delta put, the IV is 75, right? Puts trading more expensively, trading richer, or an indication that puts are being bought up more, or at least calls are being sold more. And the negative value is indicating that people are either buying downside protection, they're, hedging, they're, making the speculative play for lower, or they're selling upside, which is still an indication that they're not biased for higher anyway. So we've had this where it's blown out a lot more recently. And what you want to see is that price has been in a downtrend before this ultimately blows out, and it looks like people are kind of just jumping for any level of protection. So 25 delta skew, that is one of the things we look for. I'll show you guys what that looks like on the chart. Quarterly basis, so compression to parity. There's not really a whole lot of reasons for this market, I think, to trade flat, or rather in backwardation, where the further out tenors, or the tenors along the term structure, so quarterlies are the ones we're referring to, so 3 months. I don't think there's any time where we're going to see those going below zero again. I can't imagine what would cause term structure to trade like that and for basis to be squashed down to zero. It's an opportunity to get long without paying a funding rate, right? Normally, if you're trading those futures contracts, you're paying the premium that price is trading at relative to the spot market. So quarterlies being really compressed, right? It means that one, that basis trade is already completely used up. Two, it gives you an indication that sort of the speculative trade has been completely taken off. And that reset, I think, is often it's often something that you see at bottoms. Another thing is perps, right? So the negative flip. Again, the funding rate, so excuse me, perp funding. The funding rate is something that has changed as of products like Athena being introduced to the market. It doesn't mean that it's ineffective at this point. So at any point when the spot market is trading more aggressively than the perp market, when there's more spot buying and funding is negative, or there is, let's say, funding is just persistently negative, right? And price is no longer rewarding those sellers, that matters, okay? It is a drag on positioning. If funding stays negative long enough and people are, they're in short positions, they begin to pay for those short positions without getting rewarded. In a bear trend and a bull trend, it's just a cost of doing business. So you can't look at it and say, oh, funding's negative, price has to reverse now. No, it incentivizes people to take the other side. It incentivizes one side to close out to keep those markets in line. But it starts to matter when price is no longer rewarding those sellers, right? If funding's negative. During a really strong bear market or bear trend, right? The same as on the way up, like funding can stay negative and it's not a big deal because that is the right trade to be in. And the cost of doing business is, it's irrelevant if, you're short something and it's paying 5 to 10% and the funding rate is, annualized, who gives a shit, because you're making much more than that during the duration of the trade being put on. So, it's not a big deal. It becomes a big deal if you're in position and the market is stagnant, right? Or if you're seeing that funding is negative and price is starting to trade back higher, it shows you maybe what side is the heavier hand, right? Sellers can no longer bring the market lower, sellers are trapped, yada, yada, yada. So that's good. We started to see that recently. I forgot to say that the quarterly basis flattened out towards like 3 to 4, which, like I said, I don't think we're going to get down to 0. Stablecoin APRs, right? The apathy floor. So basic stuff, borrowing markets, right? When there's no like incredible demand to borrow capital, right? That usually you see like this blows out at towards highs and at peaks, and it makes sense, right? There is an aggressiveness in the market to seek out extra capital, to gain extra exposure, and you see this excess during times of excess, right? Not to be redundant, but to be redundant. So seeing that really flat, in the easiest explanation is it just shows that there is lack of interest in this market, which is what you want to find, or rather what you will find. When you're near, by the way, this is not saying like the bottom, but you're at least near some kind of temporary bottom, right? And near is not precise, right? So near is not like a fucking line cut with a laser. Near could be a shoreline, right? So we talk about, lines in the sand versus shorelines, right? A line in the sand is like a really specific, hyper important level that's really well defined, okay? There's very few of these in markets. And a lot of times they tend to revolve around levels that are being protected, but there's very few cases where one point matters that much. What matters is like an area. So the idea of the bottom being in, hey, listen, we're at 88, 89 now, whatever it is before I started the stream. I don't even have a price feed right now. Like that, saying that right now implies that the market can trade all the way back to low 80s. It could trade into the high 70s. It's rough area, right? It's a shoreline. And the idea of a shoreline, right? Because the water washes up on the shoreline, there's no precise level where it stops. It's kind of all over the place. Term structure inversion, right? Again, I don't think you're going to get this, right? I probably should have put like an IV blowout on this, right? So implied volatility blowout, but I don't think you're going to get a term structure inversion. These are things that you should see in the past. You should see further dated contracts, right? So those tenors that are further out, 1 month, 3 month, 6 month. Crypto doesn't really have too many. You see those traded below the spot price, right? Which means that there's a trade there because they're going to roll back to the spot price over time. The open interest divergence trap. So where you start to see a lot of positioning come into the market, and for the duration of this whole move down, right? For the duration of this whole move down, positioning has been coming in, but it's been rewarded, right? So everyone's like so quick to say, in this market, of course, everyone's so quick to say that the sellers that come in, like they have to get squeezed right away. That's just not the case. Like sellers can be winners for a really long time, especially when the higher time frame trend flips, because suddenly you start to align a lot more systematic flows that are kind of, you know, they don't give a shit about feelings, right? It's just, this is the signal, right? We've lost these levels. Momentum is now to the downside. Continue to hammer the market until that changes. You'll get trend followers selling into lows and buying into highs as a result, because they're acting on signals continuously and not necessarily predicting where the turns occur. So you see that on the way down, the open interest was continuing to move up, and people on the timeline were like, shorts are going to get squeezed, shorts are going to get squeezed. The only thing you could say when open interest is going up and prices continue to go down is, as long as it's staying up, that one, there's a buyer for every seller. It might be a liquidity provider, it might be, you know, a market maker accumulating inventory as people are selling into them. They can be hedged, right? So it might not have that much of an impact. It still has to roll off, obviously. You could always say that every seller that gets involved has to sell, and every buyer doesn't have to sell, right? So technically a buyer can hold forever. Not if the funding is positive, right? Unless they continue to, you know, shore up their position. But shorts always have to close out. But still, as long as that positioning it exists in the market and the market is trading lower, we could say with certainty that every seller is correct, right? And the longs are offsides. So until you start to take back key levels, right? You can't look at that OI and say, you know, the OI is fuel. What you need to do is start putting a chunk of that underwater, or at least retrading back above it. So the open interest divergence trap is seeing that price has begun to establish a floor. You might look at deltas and CVDs and see that there's absorption. You look at funding and see that the spot market is trading at a premium to the futures market. And then you have that increase in positioning. And then as the market starts to rebid levels, right, as you start to get a price action signal, so sort of confirmation of price taking back a level, establishing value higher, then you could say, all right, so there's a portion of this positioning that's clearly underwater, because again, it's a buyer for every seller, right? Into the lows, like, it's not just that it's one type of, it matters what kind of buyer and seller, right? So there was aggressive sellers into the lows that were just getting, sellers were just getting away with it the entire time down. On the way up, you could buy breakout highs, right? You could just buy highs, buy new highs. You know, this is something that in markets that are trending really strong, like sometimes you have to do that, otherwise you're not getting in. So on the way down, as things begin to unravel, needless to say, sellers were able to do the same exact thing. I don't know why in this market people tend to think that it doesn't work both ways like that. And of course, actually you do know why. It's fucking, because everyone is like just delusionally one-sided and optimistic, right, about how this market moves. Another detail is liquidation composition. So ideally, yes, we want to see that the liquidations that we're getting are overwhelmingly long liquidations, right? So you want to see that we are rinsing out positioning. We kind of want to take the market to a place of apathy and just complete, like, grinding them down to sand. So that doesn't happen while, like, it's a mix, right? You want to see that we've had a major, I mean, this is like, you want to have a blowout, right? You want to have a blowout. So a lot of the times we'll see open interest come back down to a prior floor, and that'll be an exhaustion level where we'll know, okay, so we've exhausted positioning completely out of this trend. It's no longer saturated. And while positioning is still high and liquidations are still like a mix, right, where it's not one-sided, there isn't as strong of a case to be made for finding some kind of temporary pivot, extreme, bottom, top, whatever. It works in both directions, right? Spot order book skew. So this is something that, one, in this market is always going to be more often than not skewed bid side. Like if you zoomed out and you go to like the 5 to 10% bucket, 10 to 15% bucket, it's usually going to be bids no matter what. But this is something that you want to see, right? You want to see that if you're putting in a low, there is a lot of spot demand. You want to find the natural, you want to find, oh shit, that's a microphone. I was about to rip that off. It's like, what the fuck is on my shirt? You want to find the actual cash buyers of the market, right? You want to reach a level where real demand starts stepping in. and real demand that is, you know, they have they're lower time preference. They're, again, when you start to see big spot buyers come into the market, you can't look at it and necessarily say like this is going to lead to the market just marking up from here, and this is the, you know, the spot buyers are getting involved here, so this has to hold. We have to start to remember is as we start to mark off this far from highs, that a lot of the times these entities are going to be building over tranches and ranges of prices. So they might not be as price sensitive as, you know, your shorter term and your smaller speculators, right? So price sensitive meaning they're buying at, you know, 85, they're buying at 80, they're buying at 75. You don't know where the fuck they're buying, but if you see them buy at 85 and you think like, oh, that is my low because the cavalry showed up, you're probably going to run into some trouble, right? The idea is that you just want to start to see there's a level that is reached, right, in prices that is starting to indicate that there is suddenly a renewed interest in this market, not in the derivatives, but in the spot market. And then the last thing is the VIX spike. So I think the VIX spike is important, right? Because we want to see that a lot of times what you will see is that contagion in the traditional markets will spill over into crypto. And these periods where you have these blow-offs to the downside and to the upside, they do tend to coincide. So that's kind of a bonus. And this recent low, actually, we did have, we had all of those except for, you know, I think one of them was like the apathy floor in borrowing rates. We didn't have basis compressed to zero. I don't think we're going to have that, but we're starting to see these signs. I think regardless though, the trend is still down, and anything that we're looking at is going to be a short-term bounce that is going to end off selling back to these lows anyway. That's my opinion, right? That we're going to end up bouncing maybe a little bit more and then maybe a lot more, right? And anywhere between this 20 on the daily, so 94, up to, we'll say, the 20 on the weekly, which is 104 now. These are dynamic, so they're going to change over time. We go sideways longer, the moving averages will drop. Anything between there is like fair game for where a lower high can develop. But I would be remiss to not say that it is probably going to be a sell, right? I would be blown away if this market just V-reversed here and continued to move higher, okay? I would have to eat my shorts, right? I don't think that that's the case. I think optimistically we're looking at a bigger bounce, but optimistically we're looking at a big range, right? I would want to see a really big range. I personally would love to trade 15 to 20% range that gets people emotionally involved at the extremes, right? So you're trading FOMO at the highs, right? You're taking the other side of FOMO at the highs. You're taking the other side of liquidations and fear and panic at the lows. And this ideally can persist because I think the best case scenario for this market is to have a time-based correction. So looking at a couple things right now, so just go over some levels. Obviously, I went over a bunch of shit and I didn't reference any of the charts. This is the repricing of cuts so far. So we're basically looking at a cut being almost fully priced in at this point. You know, from the last, you know, if we look at how this has transitioned over the last couple of weeks, it's like it dropped down to 50, jumped back up to, it was from 90s down to 50, up to 84, and then it was up to 70 or something the other day, and then it's back at 84. So completely back on the table. What I was referencing, so just to give you guys an overlook, so funding rate, right, that's obvious. So the OI weighted funding rate, this is, so for anyone who's not familiar with an open interest weighted funding rate, this is taking the leading exchanges and weighing them more heavily, right? Because there's obviously a fucking ton of exchanges in crypto that are completely irrelevant. And if they're like a B to C tier exchange, I don't know, you probably don't want that feedback, right? And the reason is because they probably trade a lot thinner. A lot of the times actually not a lot of times, most of the time, the market makers and liquidity providers on the shittier exchanges are looking to the signals generated from the better exchanges to keep their markets in line. So anything that happens on a crappier exchange or a smaller exchange, right? Because there's small exchange and then there's fucking shitty small exchanges. You guys know the janky exchanges. Things that happen on there are not really relevant. They're aberrations, right? Because it's a matter of them just not having liquidity. So you don't want to have a funding rate from, you know, I don't know, name any exchange, right? That's not an A tier or B tier exchange. Like C tier exchange, you don't want to know what the funding rate is. So the open interest weighted funding rate, this is obviously going to be taken based on the leaders by open interest in the market. That's kind of self-explanatory. The SKUs thing, this is what I was talking about. This is actually annualized basis. I would just keep an eye on Binance and Deribit, right? You could look at OKX too, but annualized basis, I think the low that it reached was, this is 6, we want to do quarterlies over the last few months. I mean, this is as low, I mean, it's pretty damn low, right? This is Huobi, not really relevant anymore. I mean, but it reached, where's the Pico low? It's lower than that. It was around 2%, right? So again, this is the quarterly tenor, so the 3-month. That is really low. I mean, the last time we put in a low in the middle of the summer, at the bottom, it was above that. So that's a good piece of feedback. L-Bank, yeah. Here's that 25 delta skew. So not one day, we're not looking at 0 TTs. 1 week is gonna give you like that kind of like last minute hedging view, short-term speculation, not 2 month, not 3 month, not 6 month, not 1 year. These tend to trade more optimistically, period. I mean, I think I'm not probably equipped to give too high level, like a high level view on the options market. I have said numerous times, like the options market is probably a filter or a lens to look at the more sophisticated participants in this market. In crypto, there's less interest in options than in TradFi, right? In TradFi, they don't trade perps, they trade 0 DTs. So everyone on Robinhood is trading. They're not trading like the single names by buying the stock. They're expressing their views through the leverage product that they have, which is the options market, right? So there's a bigger composition of retail and then institutional participants in that options market. In this market, there's very little retail trading options in this market. So I think it leaves you with a composition that is a lot more intelligent. And then as a result, this market is often more prescient directionally. So whether it's looking at block trades or whether it's looking at SKUs, I think it tends to be, not all the time, right? But there's many times where it's a leading indicator, okay? And there's many times where you see a very clear divergence, like price would be making a higher high and then SKUs will be making lower highs, and there's just protection being bought in advance, and it's like, oh wow, that was perfect, right? I've mentioned this numerous times over the last couple of years. 25 delta skew is one of the options. 10 delta skew is the other. 25 delta skew is what we're interested in. And the skew is the other formula. Risk reversal is what we're looking at when we're talking about, where there's not precise, but the 25 delta risk reversal in this case is the FX calculation, which is the calls minus puts. And to zoom out a little bit, go to 6 month, just to give you more of a view, and then throw price on there. I don't know why price isn't popping up. This is as low as it's been. Let's go back a year. I think Amber Data has a longer look back. It's reached historic lows for this year, and then even further back than this. So that's really good. Liquidations isn't up to date, right? But over the last couple of weeks, there's been a massive amount of long liquidations, right? We still have open interest that is kind of elevated, but I think, like I said, I think a good amount of that is sellers that have just gotten away with it. So that is some of the derivatives feedback that I think is really useful, and right now is giving some good signs, okay? By the way, so obviously I work with Kalshi. I shared this earlier. So will Bitcoin be above 250K by 2027? There's barely any liquidity in this market. It's very thin. So I mean, I think it's doing $40,000 in volume. So this was just like a kind of tongue-in-cheek take on the confidence of some people in this market who say it's going to 250, it's going to 3, it's going to 5. It's like, all right, well, there is this really, really asymmetric payoff that you can get right now. You could allocate some to it. I wouldn't say that you obviously replace any kind of spot exposure or more liquid exposure you can get. But shit, I mean, it's going to pay more if the market goes above that level than being exposed just delta 1 to the spot. But I just want to clarify, one, I work with Kalshi, right? It's a phenomenal product. The link below still gets you a discount. And two, this is really illiquid, really illiquid. So if you're going to play with it, throw a couple bucks at it. All right. how do you know if OI is a buyer or a seller? So open interest, there's only one way to create one contract of open interest. You have to have a new buyer and a new seller, right? The composition of those buyers and sellers, how much leverage they're using, that is important, right? So who is the aggressor, right? So who is taking is important. We make a lot of assumptions around who is taking and what their behaviors are, right? Takers tend to be, right, they're getting adversely selected. Takers tend to be less informed, right? They're acting like they're informed. The takers in this market tend to act with more leverage, so there's more path dependence. And every OI contract, though, is this, it implies there's two sides opening. The other side of the market, the passive participant, is often going to be a liquidity provider, a market maker who is going to take that inventory, hedge it if they need to, right? A market maker doesn't have to hedge. Unless it seems like there is some kind of informed flow, a market maker could just, widen spreads and make it look more attractive to take the other side. But there's always a buyer and a seller, right? So that's why I said, if we zoom out and we look at this, this is open interest down here. Let me actually use, hold on one second. What do I have? Layouts. It's going to fuck with people's eyes because I just made the light version. Oh, wow. This is light too? Oh, it translated across all my layouts. He has to make this so you could change the font color because otherwise it's kind of annoying. Yeah, I don't want to use this. Hold on a second. Okay. So throughout the duration of this move, open interest is increasing into the low, right? And this means that buyers and sellers are getting involved. It was staying elevated. So you can make a case for the buyers being passive participants that were either hedged, right, or sitting in underwater positions. You could obviously make a case for sellers being on the right side of the market. What you can't make a case for is that a short squeeze is entirely necessary just because the open interest is up and the price is moving down. You have to start to say, or see rather, that, and you could use things like anchored VWAPs and flow, different views on flow to say, all right, so here's the aggressors getting involved. Here's where we're seeing most important increases in open interest or the most relevant, again, absolute absolute levels don't matter as much as relative levels. So relative change in open interest, relative changes in open interest are more important than absolute levels. So during the course of this move down, it's a mix, right? There's a buyer for every seller to create the contract. Sellers are clearly on the right side of the market. The only way you could start to say that a squeeze is going to occur is if you start to rapidly retake levels where positioning got involved. All we're doing is just to simplify it. Let's say that, right, here's an even split, right? And here's a POC. Here's a market over the course of one day. Market's ranging, right? The POC is, in many ways, it's fair value. So it's the most agreed upon price. Let's say it's also the POC of volume 2. If we're just going to make a broad, we're painting with broad strokes here. We're making it, it's more of a generalization. If we're below where most of the activity occurred for the day, we could say that it's more than likely sellers are in a better position. If we're above it, we could say it's more than likely buyers are in a better position, right? You might have a single buyer, a single seller that really skews things. But if we look at, again, price moving down and open interest coming in the entire time, and there's no effort back, sellers are clearly on the right side of the market. The only way we could say that we're going to start to put any of them in an uncomfortable position is if we start retaking levels aggressively, which we weren't able to do the entire time down. So sellers have never been in really any trouble. The only time more recently, only more recently have things flipped, where we've seen a little bit more spot aggressiveness. So it was sell program, sell program, sell program for the last few weeks, right? New York session, sell program. You'd get, it was almost like the Asian session offered relief because of the displacement that was created during the New York session. So you'd get an overwhelming amount of selling during the New York session, and then you'd get this kind of Asian session float where the market would float back up kind of on minimal effort because it doesn't take much. Make no mistake, when you move price down this much, especially this rapidly in this kind of market, it's easier to go back up, right? Because if you look at a market that is up over a long period of time and then sideways, without selling off, sellers are in position, right? If every seller is excuse me, that was not what I meant to say. Every buyer is a future seller, right? So as we continue to mark down and we force people out, mark-to-market losses, liquidations, right? Voluntarily selling, we've taken out future sell pressure, right? Of course, trading back up to key levels, you're going to run into supply and people looking to get out at break even, or, you know, getting out as close as possible. There are definitely people still underwater. But on the way down, you take out so many sellers that on the way back up, it's easier to move. So you'll see like rallies will be on low volume, or one indication that a rally is likely to fail and it's just a displacement rally is like if you have a, let's just draw this out real quick. Where's my drawing tool? Please work. Please don't freeze. Please don't freeze. Prees. I just said prees. Where is this? Here we go. Let's say you have a huge liquidation move down, right? Big move down, and then here's your volume. Big capitulatory spike in volume. If you're looking to fade a move, right? If you're looking to get involved in a move traveling down, right? Trade with the trend. What you want to see is that the move back counter trend occurs on light volume. And that often happens because it doesn't take much to move the market back up after you've taken out a bunch of that pressure that would have existed otherwise. So at this point, when you start to get some kind of like market moves back up and then you get some kind of underside retest and failure, it's easier to get behind a sell at this point because you know that this move was, it was facilitated due to the fact that there was barely anything stepping in the way. And it wasn't necessarily a ton of buying that got us there. It was just float. More recently, we've seen that over the last few sessions, there's been more spot activity. So interestingly enough, this Coinbase selling that we see, we saw this last Thursday too, I think. So I just noticed that. I think that happened either last Wednesday or Thursday, because this was into the close. Let's go back. What was that? What was last? That was the 20th. Let's see how good our memory is. Yes. There we go. 16 to 20 into the close. And we have the same thing that just happened, I guess, while we were streaming. So that's interesting. But we're seeing overall, though, that this move, there's not a whole lot of aggressiveness on either side. There's starting to be some signs that spot buyers are getting re-involved again, which is good, but I don't think it's minimal at this point. I think the best, wait, what's going on here? Getting ahead of myself, and something's changed around since I reloaded this. There we go. The setup that I'm looking for right now is I think we're going to close this day out red. I was going over this thesis yesterday in the stable. I think we're going to close this day out red, right, clearly. What I would look for going into next session, because one red day after 2 days up, this market's going to start to go, okay, we're going right back down again. This is my opinion. And I think what you want to look for is off of the opening drive lower. I hate drawing squigglies. You guys know I hate drawing squigglies. I think it's a joke. Off the opening drive lower into the next session, so during the IB, I think you look for a trap to form, honestly. I don't know if this market's going to reverse this fast, right? So look for a trap to form. You have a really clean composite. So this is going to be an inside day as well. So we have, I mean, I'm talking a little bit ahead of myself because we have a couple hours till the session closes, but right now it's setting up nicely. You have the entire session back within yesterday's profile. You have a very clean composite. So this is kind of the perfect location for a trap to set up. So we go into the session, into the Asian session, we have an opening drive lower, trade back below this, 86 level, trade back above. I think this is probably a decent long opportunity, honestly, back to the high. My view is that this market is so panicked and so sort of reflexive to sell at any sign of trouble again because of the move down, right? The PTSD that's been created, that we'll see this setup arise. I'm pretty confident this is going to happen. I mean, shit. I said I was really confident yesterday, so I'm going to be in trouble if that doesn't happen. Otherwise, I mean, regardless, like this is a mechanical setup now. If it finishes like this, because it's an inside day setup, because it's such a clean composite, like I think you just look for the trap setup at the low. The opposite would be if we just continue to trade higher from here, you probably look for a trap at 90. And I think it's within reason to expect we probably range within here for the next couple of weeks. Other than that, let me take some chart requests because I spoke for a long time and we are on an hour, guys. I'm sorry, I talk. I am loquacious. I think that's what it's called. Let me look at the chat. Right. Doesn't CVD indicate overall directionality? It indicates aggression, right? So it indicates aggression. It could be misleading though, depending on the order type, right? It's indicating aggression, and it also gives you a view on liquidity. So if CVDs are tracking higher, but price is not tracking higher, right? If CVDs are tracking lower, price is not tracking lower, you're getting an idea of where the thicker side of the market is, right? You're seeing that buyers are coming in and not being rewarded. You're seeing sellers are coming in and not being rewarded, depending on where the divergence is. But like I said, zoomed out, like this trend is very much intact down. I pointed this out last week. It doesn't mean that you can't take trades back in the opposite direction, because I was long Fartcoin this morning. Like Fartcoin might be promising, right? I mean, really key contextual level, starting to reclaim some trend levels. I mean, out of favor, completely forgotten. Front ran most of the market. It might be very underallocated to things like this. I think you want to keep an eye on. Render, let's see. No signal on cam, let's fix that. I don't know why that happens sometimes. It's like after an hour sometimes it does this. Let's try that again. There we go. Let's see if we can get that blur going again. Is that blur going again? No, we gotta press the button. I mean, I don't mind. You guys can see my daughter's artwork. Let's see. There we go. So we got the daughter's artwork. Not all of her artwork, obviously. We got some classics in the middle. Let's go back to this. Yeah, I think Fartcoin's a potential momentum trade, but big emphasis on potential, right? I don't want to be too focused on alts right now. Don't want to be too focused on alts right now, honestly. Every passing cycle, there's less and less of a reason to be focused on alts, I think. Like we create new alts, and I think those have their time in the sun, but I think the market is becoming just really keen on the idea that there's nothing really of value that's being created in alts. Render. Yeah, I mean, I don't really see anything here. It's in a downtrend, right? I think the only things you want to be focused on right now are things that are exceeding BTC, that are doing better than BTC, right? So they're outperforming BTC to the upside. Like XRP is an example of a trade where I would consider the same setup that I just mentioned with BTC. So if we look at XRP, now we're going to fix this. The idea with XC, I don't know what the fuck's going on. Excuse me. There we go. I would look for the same setup with XRP, or the same setup that I was just talking about with BTC and XRP. You have a poor low, so it's an obvious target. You have an inside day structure, and you have an area of single prints. And a lot of the times, these single prints are created when the market reprices really quickly and blows out positioning. So the singles after a strong trend move tend to be extremely reliable just because you see sort of a bid to cover behavior there. We've traded there once already, but if, again, into the Asian session, because we've had Asian session float, we also have had good New York sessions the last two sessions, so it's tough to say that the Asian sessions will continue to trade the way they did. But if we have an opening drive lower that sweeps what are today's lows, but will be yesterday's lows, I would probably look to trade this reacceptance back within value. I mean, you could be more conservative and say, if we're back above this POC, you just target these highs. But an example of an alt, though, that in terms of picking alts, it doesn't make sense, I think, to be in alts that aren't moving with a little bit more zip than BTC. So normally if I filter alts to trade, it's going to be based on, one, are they liquid? So what kind of volume are they doing per 24 hours? It doesn't necessarily give you an indication of liquidity 100%, but it tends to work that way. Two, relative volume. So I don't want to be trading something that has a lower relative volume or a lower relative volume or not relative volume, excuse me, a lower ADR, so average daily range, than something that's more liquid, right? So I normally sort by ADR, relative volume, and that's it, right? And then what is outperforming BTC? There's other times when I'll use scans that are more momentum driven. I've talked about some basic scans where you just use oscillators, right? Just to start to create a watch list of what things are starting to show warning shots, right? So first time oversold, first time overbought. You don't reflexively take a position, but you start to really pay attention to these things. But I don't think alts really, unless it's outperforming BTC, it doesn't make a whole lot of sense to focus on them. Hype. This is something that we talked about the short a couple weeks back or over a week ago. I think hype is probably going to continue to be a short. I closed out my short. I'm thinking about reestablishing it. Hype seems like the only port in the storm, right? Everyone is in agreement that hype is the thing you continue to buy. You just continue to buy hype. It's just the best thing to buy. The problem is, like, this market is so positioning driven, right? Because it doesn't have the fundamental story that equities do a lot of the times that they can lean on. So this market leans on narrative a bunch. It leans on price a bunch. And the reality is, like, this market is now below. If you just looked at this structure and said, we're just going to toss an anchored VWAP on it, right? We'll toss an anchored VWAP on it and say that this is, where the fuck is it, by the way? Why is this not anchored VWAP? Not, we'll do it more recently. What's going on? If you took an anchored VWAP on this, whatever, you just have to trust me. You're below it, right? So you have to look at this as, like, that is a cost basis of everyone who got involved up here. And I know that for a fact, most people that I know that are bearish on this market that are they're still buying hype, which I think sets us up for a bigger puke and hype. So I think the 20s trade, the mid to low 20s might trade. And now, anyone who's been buying this is a little bit less confident, I would assume. So I think we get a couple days of chop around here, and then the trend is down, so I think you're going to have to work against more pressure now. I created this regime filter that I haven't exactly gone into too specifically yet. I'm doing another workshop in January, so it's not going to be like a whole new thing. Anyone who's a member of the stable is going to have access to it. We're going to do 3 to 4 days of just focusing on trading and not really much on the market, so it'll take a little bit of a break. But I think people need to have a view on what the overall regime is, and very simply what the trend is, because so many times people fight shifts in the trend that if you just thought of the trend on the high time frame as, again, the current, right, or the wind, right? You don't want to piss against the wind. Once the trend turns, if you're trading, here's a better way to put it. Everyone down here in BTC right now, or a large amount of people, there might be, patient spot buyers that are sitting within a range of prices down here. But a lot of the people that are getting involved are short-term speculators that, again, are like really wincy and quick to get out of positions. If you're trading intra ranges that are intraday, intra-week, your mid-time frame traders, your scalpers, your HFT, your intraday traders, they could all get involved, right? High time frame traders, your position traders, the people that move the market, they're not going to be active in the same ranges that you and I trade, okay? They look to get involved at the major inflection points, and they look to get involved over a range of prices. More often than not, this is not to say that there's not examples of this, which is not the case, right? Where some asshole just, sweeps the book and that's it. Sailor. Once you change trend, you start to bring in the flow of much larger participants that might have more reason now to reinforce that trend. So if the market makes new all-time highs, this is an example, okay? Suddenly everyone can get involved at new highs. And the reason is there's a ton of liquidity also. A big break in the trend. Suddenly you tell a ton of the market that the trend has definitely objectively shifted lower. And now a return higher to some of those key levels, those key moving averages, they're going to be absolutely reinforced. So if you don't know what regime you're in and what trend you're in, again, it's not as simple as just looking at higher highs and higher lows. You're going to run into trouble, right? You're going to be taking longs at the worst possible locations. You're going to be hanging on to things far longer. You're going to miss some of the better short opportunities that honestly should realistically on balance probabilities set up, right? The market can surprise everybody, but I think you have to operate with some level of confidence that it's going to take a while for this to change. The debate is like, what is a while? Is it months? Is it years? I don't know. If I had that answer, right, I would tell you guys. I would assume it takes a little bit longer than most people are comfortable with, right? You get people to a place of like not disillusionment, not just depression, right? If you can't trade, it's going to be upsetting. If you could trade, the market's going to be better, I think. The markets have been awesome to trade the last couple of weeks. ES, the NQ today was, I mean, indices were in play. Something to keep an eye on is Monad. I think it's probably going to end up being a short, but I wouldn't want to front side short it. You want a short failure on this, not step in the way of it. Do we need both TradingView and MMT Pro? No, I have access to all these things because, again, I think as a larger account, you get a lot of this shit for free. In crypto, there's a lot of platforms that have the things you need, but not the pairs, and then they'll have the pairs, but not the things. You don't need most of this shit anyway, but I think MMT is a complete product. I think you should have MMT at this point. Like, that's my shill. I don't work for Anthony. You know, he gave me access to the platform for free, obviously. But it's a fantastic product. But TradingView is incredible, right? I mean, TradingView is an incredible product. I don't think that people use some of the more incredible features. I think that Screener is, you know, rather than arriving to the morning and just scanning charts manually, just create a custom screener and pull up everything that you need to see. And then scan through that, right? Damn, I've been going for a while. My eyes are dry. I'm starting to get tired. I think that kind of covers it, guys. I went for a while. I'll be doing these every Friday, though. Market Monkey Terminal. Gold looks great right now. I'd pull up my Sierra charts if it wasn't, you could see, I have reconfigured some things. So I put my Sierra over, I don't know if you can see right here. I have everything vertically. So I'd pull up my gold chart book, but I think TV is fine. Gold trades extremely technically. For most of the year, we've just been saying in the stable, just long everything you can. Only until after the high break did we start to say, when people are lining up around the corner to buy gold, pump the brakes a little bit. But I think gold is trading really technically again. I would be surprised if this didn't trade towards 42. Keep in mind, this is, TV has a continuous contract setting. Gold has actually rolled over. Well, the gold should be rolled over now, so to the February contract. So I was discussing something this morning in the stable with a member who trades 1 ounce gold contracts, and they're physically set. They're cash settled versus physical. Around this time of the month, and this week especially because it's a holiday, if you're trading physical gold, you get the notice because you don't want to get delivery, right? Your broker wouldn't allow it, but people roll, right? So some people forget and they sell. They just ape out of the chart. And this can offer prices that you could take advantage of in the 1 ounce contracts. So it might be worth exploring. They're a lot less liquid, but the physical gold the GC contract is physical. It just rolled from December to February. And the 1 ounce is cash settled. So it's a bit of a different story. You don't have the same sense of urgency to roll. And there's not going to be a price impact by the 1 ounce. ExoCharts is great too. I just had some issues with ExoCharts. Yeah. I think that covers it though, guys. If you guys are interested in the shit we do in the stable, it's right here. I have nothing against anyone who doesn't, believe in gated and paid communities. I've tried to make something that is far different than anything. I put my reputation on saying that it is different than any other, paid group. If you came in, you'd see that it is a completely different era of professionalism and maturity that I don't know. I haven't seen it anywhere else. But most of the stuff that I share is in there now. I'm going to be more active in Telegram. I'm going to be more active on YouTube, obviously. But so far right now, it'll be just, and this is on Twitter too. You guys are showing up on Twitter. It'll be every Friday. So every Friday at 2 p.m. I think that covers it. I think that covers it, guys. I'm kind of tired now. And I have a toddler that's going to wear me out. All right, guys. I'm out. Thanks for tuning in. Leave a like, leave a comment, and I'll catch you guys